We did get Indonesian GDP out, and it came out for year-on-year growth at 4.94%, so just under the expectation of 5%. But quarter-on-quarter, it was down. It was down 1.7%, better than expected versus the expectation. So with those numbers, we see growth slowing. Significant impact on the rupiah?
I think, yes, 5% was slightly slower than what the market was thinking, but 5% is still quite strong in this external environment. I mean, most economies in Asia even are struggling, and relative to that, 5% is still a very decent performance. I think the other important factor for the Indonesian rupiah is the stability in US Treasury yields. What we usually see for some of these high-yielding currencies is that it's not just the level of US Treasury which matters, but also the volatility. And given that US 10-year has been so stable over the past month or so, that means that high carry currencies like rupiah look much more attractive on a vol-adjusted carry basis.
Let's talk about the Aussie dollar. We had a retail sales for December. It was a miss. We saw the Aussie dollar weakening off the back of that. But in this environment of rising commodity prices, where do you see the Aussie dollar going?
I think in the near term, it's very likely that we go and see a retest of the 78 level. But it does look very unlikely that we will break above that. Even though commodity prices have been higher, you still have the monetary policy divergence theme playing out. No one expects RBA to hike rates this year. Fed market is still pricing in 2 hikes. So this monetary policy divergence, real yield differential theme will come back again, and that will sort of weigh on the Aussie over the medium term. But near term, it does look likely that it's probably going to touch the 78 level.